All right. So we looked at all the cost center postings yesterday. How to run the reports, right? There are lots of reports that we have to run. There are several reports. So I really encourage you to go here. One of the things you become familiar is go here if you have nothing to do. You're trying to figure out what to do next. So, well, you would not, but I'm just saying. So go on, in every model, you have all these reports, damn reports. If you go to profit center accounting, you have all the reports. Okay. So if you go to profitability analysis, product costing, internal audit, everything, you'll have so many reports. So you just make a sense of what they are. Okay. Basically, they're cost object reports. Okay. Cost object report. And then they do by range, cost center, cost elements, the actual comparison, plan comparison, target comparison. That's it.
Yes.
Okay. So you got it for you?
Yes, got it.
All right. So what we're going to do is, so what's the transaction code for cost center report, line item report?
KS0.
KS0 to view is KS03.
KSB1, right? CCA line item. Okay. And KSB1, I think it's a CCA plan line item report. Okay. This is CCA actuals. So there's a difference between budgeting and planning. Okay. So KSB1. So our controlling area is 1000, and then I'm going to work on the company code.
1000. Organization unit.
So this is important, right? Yesterday, for some reason, we did some mistake because of the wrong company code. So now we should be able to get the reports. So we got this, but we have only one cost center VRIT2R. Who created this? Or because did somebody create this?
No.
Okay, so we're doing for January. So how many cost centers we have here with the values? Excuse me. 1000, 2200, 9030, and then FC6661 marketing, FCZZ2 human resources, and this guy Ravi CC, Ravi 123 CC, VRIT labs, BSc VRIT, all of this. Okay. So offsetting accounts, 56. Wow. You know what? Okay, why this is showing 19100? Why is this showing 56?
This is a GL 19110.
The GRIR account.
Yes.
What? So you know what is offsetting account, right?
Yes.
And why this is showing 23? What is 23?
It's a goods receipt.
What is 23?
23. Offset account number.
Is the range that they had given?
Is a vendor, sir, offsetting account. This guy
Yeah,
is
Starbucks. Yes.
yeah, 23 is Starbucks, or is an invoice, right?
Yes.
In this situation, this is debited and directly vendor is credited. Okay, this situation is expenses, but the GRIR is credited. It's the offsetting account. Okay, this account is debited, expense is debited, but on the other side, what is the credit? Credit went to GRIR in this situation. In RE, the GRIR went to the vendor account, but it's straight 0. I don't know. So this is offsetting account. Okay. So what I'm going to do is I am going to download this to Excel, and you know how to download this to Excel. Just right click here. And I'll tell you why. Let's also bring transaction type. Okay, what's the business transaction here? How did this come here, right? So business transaction. We bring the business transaction, and yes, and so these are the business transaction. If you run a KSB1 report, you could look at this and say where the entries came from. Okay, where the entries come from for all the cost center reports.
Right.
What is the source? What is the source?
The controlling CEO.
No, FI, right? See, the cost and this is in CO controlling. Okay, costing is controlling. Okay, and all this entry come into controlling from FI. FI is your source always. Okay, financial accounting is your source. GL is your source. Correct?
Right.
Everything happens in GL. Like when you create a purchase order, a sales order, everything in GL. Okay, then you post to a cost center. Correct?
Right.
When you post when you have an expenses, you post a cost center. When you post a cost center, that is when this guy will flow into controlling. Treat this is a different, completely different ledger. FI is a different ledger. Okay.
Right.
Got it. So when all the sources FI. When I run a report like this, I can say where this entries came from. Okay.
Right.
Coin means the source is from FI.
Okay.
COIN means, let's see. It's not now responding. So you can drill down and go to the original report. But if you do this guy here, drop down, what do you call this? Drop down box. If you drop down, if you click in the middle, it goes to it's called drill down. It is drilling down to the original posting.
Yes. Can we also call them radio buttons?
No, this is drop down box. Radio buttons are different. Radio buttons are basically a small dot that you check. Okay. So there are more than 500 options, but let's go to, see there are more than 500 options, and you want to bring everything, you click here. Okay, then remove this guy. Then if you know something, you can put here, otherwise just enter. Okay.
Yes.
So I want to look at coin. Okay. See, CO through postings from FI. What does it mean? It is coming from financial accounting, FI. Okay.
Yes.
So you are a FI CO consultant. When the job description, they said strong in FI, strong in CO, right?
Okay.
Right. So this is coming from FI. There are particular role only for FI. There are particular role only for CO.
Yeah.
Okay.
So this is coming from financial accounting. So you know this, right? So what I'm going to do, I try to download this. I don't know what happened. System did not respond. I don't know if I click. Maybe I can do this way, I guess. Spreadsheet. Let's see. Okay, select from all available formats. I think they did not integrate this with Excel, I think. No. Wait, no, it should be, right? You downloaded, right? Shiva, sorry, Ravi?
Yeah, not this one, sir, actually. I downloaded the different.
Yeah, it's best save. Okay.
Yeah.
So this is how you download reports. So I'm going to put this in my somewhere here. Let me put my desktop. Yes. And why I'm downloading this?
You can sort it or do something.
Trying to create a file. Desktop. Remember my decision. Hello. Hello. Okay, the file transferred. Okay, so I'm going to do this guy here. So the file is here. So when it's downloaded, it actually came in. It has a pivot and everything. Okay, it had everything, right? I got everything. So this is called pivot because in my report I have this all the subtotal. Okay, everything got subtotal. Okay, so I can remove if we do this. This is how subtotal pivoting works. You know, right? So I taught to this guy yesterday, day before pivoting. So this comes automatically pivoted. SAP transfers the data pivoted. See? Okay.
Yes.
If you don't want this, you can remove the pivot here. So you can go to your layout and you can go to sort order. Okay, see? Because this is doing a subtotal by cost center cost element.
Right.
And this is sorting by cost center cost element and subtotaling by cost center. If I don't want this, I can remove this guy here. Okay, I remove this completely from my sort. I don't want to sort by cost element under the sort category. I remove this guy here. Now I go back to, then it will be like one report, right? See here?
Yes.
Now I'm missing the cost center. I'm going to bring the cost center. So there's another way of doing this, cost center. Come on, cost center. Okay. So this report is a very, you know, you don't have to work with the whatever SAP, what Excel has given. So this is another report. So I think it's okay. I like this report as well. That's fine. So this is another way of doing it. Now with this, what we're going to do is, so we're going to throw your human resources, 2,300 cost centers. Okay. Then human resources is a group of cost center, and they have 10,000 cost center, for example, okay, or 2,000 cost centers, human resources. It's a cost center group, right? You know the group.
Yes.
Okay. So under that group, I'm going to take this cost. Let's say I'm going to take $100 and send it to the corporate services. Okay. How I will do this? Okay. This is a very important function. It's a very important critical function during the month end close. Correct? Because month end close bookkeeping. So what is the responsibility for finance people?
Bookkeeping.
Correct. That's their only role is to plan to report, record to report, bookkeeping. They don't care about profit. Okay, that is not their job.
Yes.
Okay, if everything's kept correctly, the profit will, somebody will look at it. So your job is not to look at the profit. Okay.
Yes.
You are supporting the finance organization for record keeping, bookkeeping. Okay, great. So I sent you some documentation yesterday, what they are, cost allocation tutorial, what exactly it says. Okay. So primary cost element, secondary cost element. What is cost allocation in SAP? Okay, what is primary cost element? What is secondary cost element? So stay with me. All the postings happens in financial accounting, and you know, right?
Yes.
Okay.
Yes.
In financial accounting is a source. When you buy a good, it's to purchase order, which is in financial accounting. Okay, it's in FI. When you sell, is in sales and distribution. That the document posted into financial accounting, right?
Yes.
And then if it's just a cost center in purchase order, it posts a controlling document. Now you remember, right? If you go to purchase order, right?
Yes.
If you now, so that's why if you make a transaction posting, okay, let's do the guy. So did you attempt to create a purchase order, Fagin?
Yes, we created.
Okay, great. All right, so this is a material document. I go here, okay, financial documents. It shows me financial documents. Plus, in addition to that, it is showing profit center document and special purpose ledger document. Okay. In this case, there is no controlling document. It's a profit center document. Okay.
Right.
Okay. And the reason is Controlling is costing, correct?
Yes.
Controlling is costing. In order to get to the controlling, you have to have a cost object, correct? It captures cost. Cost object captures cost and takes to controlling, correct?
Right.
Cost objects, which is like a cost center, capture the cost and take this to controlling. Controlling is used for costing functions, right? That's a different model for costing.
Yes.
Okay, and you need cost centers to capture the damn cost and send it to controlling, correct? In this case, there is no cost object because these are balance sheet items.
Yes.
So balance sheet items are not, they don't go to cost centers, correct? Expenses are cost. Balance sheet items are not cost, correct?
Yes.
It is inventory, which is a balance sheet account. It increases the balance sheet. And goods received is again a balance sheet account. So it doesn't go to your balance sheet. Got it?
Yes.
Got it.
Okay. So let's look at, even if we do this, this will be also a balance sheet. So let's look at some other invoices. ME 23, any document, financial document. Okay. See, there's a cost center here. Okay, a profit center here. There's no cost center in this vendor. There's no cost center in this input tax. Why? Because these are balance sheet accounts, right?
Right.
Yes.
This is an expense. Purchase services. When you purchase services, when you purchase to a company, when you purchase, you spend for utilities. Okay, you pay for internet. That's your expense, right? And you use internet to do multiple things, right? You serve, you take training, you take phone calls, all this stuff. This is separate departments. And you want to know at the end of the day how much I spend for each of those. So you allocate them. I pay $60 for my internet. Okay, I have a phone department, I have a calling department, I have a Skype department, I have a training department, for example. So end of the day, you want to know how much I spend for the training. So you create a training cost center and throw this money inside the training cost center. Got it? So in this balance sheet accounts, you do not have, these are not expenses because balance sheet, what's the difference between balance sheet and a profit and loss account?
Balance sheet contains our assets and liabilities. Profit and loss is, well, profit and loss basically is
Income
So-
and revenues.
how much we made money and how much we spent.
That's the easy way. I think I told Ravi. Tell me, what is the difference between balance sheet and profit and loss?
Balance sheet has the expenses for which we spend actually.
Why only expenses? Okay.
It's all kind of expenses.
Ravi, I think you should review your notes, man.
Yeah.
Okay.
Okay.
I don't know if you're writing down, and I don't know if you're reviewing. So you have to. There's and I think I taught you also, right? Memory association. You have to associate with the memory. So all these examples I'm giving, just write in your doorstep. Okay.
Yeah.
When I choose words carefully. My intention, I always listen. My intention is to get into your mind. Okay, open your brain and put it inside.
Okay.
Okay, you just have to find a way to associate with your memory. And I'm also giving examples which is right at your doorstep. Okay, you don't need a big company for this. Now, balance sheet accounts are something which has a stored value in the future. It could be negative or positive, right?
Right.
That is very simple. It is a stored value. Okay. Profit and loss, on the other hand, is operational. That is operational. Okay. Okay. Operational accounts. This is, for example, stored value. Actually, that's the wrong term, but I have no other better way of explaining things so that you can remember. Stored value. Okay. For future, either favorable or unfavorable, right?
No.
Assets is favorable, liabilities unfavorable, correct?
Yes.
Which is negative or positive, right?
Yes.
And profit and loss is operational. It is not stored. Let's say you buy today, you buy sandwich and eat today. That's done. Okay, you buy rice and put it in your fridge. Buy rice and put it in your shelf for future. That is balance sheet.
Balance sheet.
That's inventory, right?
Yes.
So profit and loss is operation, which you spend today. You eat today. You done with this today. You buy medicine. You eat today, right? It's all consumption, operational. Otherwise, you cannot function.
Yes.
It's for consumption. So another good example, you buy gold. Okay, you buy gold for $1,000. That's a balance sheet account.
Yes.
Because you're going to use it in the future. That's not expenses. If you buy gold, it is not an expense, correct?
Right. Yes.
And you use a credit card to buy gold, you pay slowly, and just you're amortizing, like a mortgage, amortization. You're amortizing, okay? And you're amortizing using a credit card and pay off slowly. Now, you buy this gold and store it. You put it in your shelf, or you put it in your your banks, to whatever it is. Now you are spending, let's say, $1,100 every year to polish it. Okay, so that $100 is an operational profit and loss account.
Yes.
Because that would not go increase the value of your inventory.
Yes.
Correct. So that do not, then you're paying for the bank charges to store it. That is your profit and loss. That's operational. Okay. For consumption and maintenance. Got it?
Yes.
Great. So in this situation, both are not, they're not, these two are balance sheet account. The first one, purchase services. You're purchasing services and just consuming it and sending it to the cost center. Cost center will not keep it. Cost center will spend it out as an expense. Okay, when you spend the money, when you incur the cost, then goes to cost center.
Yes.
Got it. So that is why if we go back here, okay, what I was saying here is correct. So when you post your cost center, it goes to controlling. Got it?
Yes.
That goes to controlling with cost center accounting. Okay, if you post your profit center, then this goes to your cost and profit center accounting.
Yes.
This goes to profit center accounting. And if you put segment, this will also goes to your profit center accounting in the new geo. So let's not go there. We'll take a baby steps. Okay.
Yes.
Great. So now you understand this. Now what I'm going to do is let's go back to this your document here. So what is primary cost element? So when you post into financial accounting, that is you're using a GL account, correct?
Yes.
You're using a GL account. Now, in order for the GL account to get into cost center accounting, it has to be a cost element. What is it, right?
Yes.
What is the use of a GL account? GL account captures your financial transactions, correct?
Yes.
Yes.
Into financial accounting. That's very important, into financial accounting. For this cost to go into controlling, okay, this guy has to be converted, has to be extended as a cost element.
Right.
Okay, then only it will go into controlling, cost center accounting. Okay, you could define some expenses. You could say something doesn't go into cost center accounting. You could do that because you don't want to allocate. That's one straightforward expenses. Okay, you don't want to allocate, so you don't have to do this.
Right.
Okay, and that is the difference between cost element and because there's a GL account cost element. In this situation, this guy purchase services, control Y, control C. I did control Y, control C. See, if it's selecting everything, I did control Y, it's going to copy only that field, control C. If I go to this, this GL account, purchase services, okay, it's a general GL accounts. Obviously, it's a profit and loss account. If it's a profit and loss account, If it's a profit and loss, account, it goes to sorry. If it's a profit and loss account, it has to be a cost element. See, if I go click here, it will take me to the cost element accounting, cost element master data.
Right.
So which this guy is taking time. Okay. See, change. It goes to change mode, which is this guy KA02. Yeah, KA02. Purchase service is the cost element.
Right.
Okay, it already created cost element with the validity date. For all the controlling, right? Any controlling master data, it will be created with a validity date. Okay, it's a management accounting, right? Controlling is a management accounting. So it's always created with a validity date. You will find it why. You will find later. Now in this field, very important thing is cost element category. Okay, when you create a cost element, you create a category. What this cost for? Okay, it's usually one, which is a primary cost.
Okay.
It's like a primary cost, which is a primary cost means when it comes to cost center accounting, it is not transfer from anybody. It is just an incurred cost, direct cost, right? Not a direct cost. It's just incurred cost.
Okay.
Okay, so we're going to use this for direct primary cost or cost reducing revenues. Okay.
Yeah.
And 11, the use for revenues, we don't usually use revenues. Okay, never. We will do sales reduction. Sales reductions are basically your, let's say you are giving allowance, promotions for sales. That goes into sales reductions.
Right.
Because it's reducing your sales.
Yes.
Okay, right. So always remember primary cost. This is good enough. And then your functional area. In a company, what are the different functions, right?
Yes.
Manufacturing, marketing, these are functions in a company, right? HR, promotions, a lot of functions in a company. Cost centers are different, function is different.
Yes.
Right. So you don't have to know, you don't have to go into detail. So just remember functional area. So they will assign this cost element to functional area.
Right.
Okay. So this screen is very important. Please. Okay, spend time on this. And copy this guy. So I'm going to send this to you both. So spend time. What is the use of cost element category? What is this? All this stuff. Okay.
Okay.
Now, in order for this GL, when you post a transaction, in order for the GL account, okay, to take this value into controlling, you need to put the cost center. And
Right.
then that GL account has to have been created as a cost element, correct?
Yes.
Then if you do that, this goes to controlling. So, which is this case has happened. So if I go back to the document here, how do I know? Here, go to document environment, go to accounting documents. See, it created a controlling document because it's a cost center.
Right.
You can just click here. It will take you to the KSB1 posting. Actual cost documents. Okay, it says only one line item because there's one line item. It's a cost center posting.
Right.
The other is balance sheet, so it goes here. And this report KSB file, okay, which is a display document. If you know the controlling document number, which is the Control Control C, KSB file, right? I'm going to open KSB file. I don't want this now. KSB file. Enter this guy. See, like FB03, this is KSB file.
Right.
Okay, so B1, That's this guy. ESP file. Display CC cost center accounting document, right?
Right.
Okay, so what we're going to do, again, going back to, so now we know what is the primary cost element. What is secondary cost element? Okay, what is secondary cost element? So secondary cost element, again, let's just do some work and then we come back to here, okay? We will actually do some, entries, then we will understand. So without wasting time, let's go to, so what is cost allocation SAP? Okay. Within cost center accounting and overhead cost controlling, okay, within controlling, not in financial accounting. Okay, there's no way you can allocate in FI. Okay, there's no way you can transfer from okay in FI because FI is your financial accounting and it's external accounting. Okay, you don't play around with that because that is your use for reporting to external authorities, correct?
Yes.
So you don't play with that. Now it's only cost controlling. Allocation plays a vital role in enabling the business users to periodically allocate amounts and quantities from sender cost objects to receiver cost object. Who is the sender? HR cost center. Who is the receiver? Corporate services. Because HR incurs all the damn costs for all the white collars and blue collars, especially white collars. White collar costs all goes to one cost center. Then they are allocating to receiver cost object. Hey, I don't want this. This belongs to you. Take this. Okay, so let's say Fagim is spending X amount of time on a different business. His boss would say, who is the vice president of that business? Okay, so I put Fagim, he is managing both the companies, okay, both the division, both the line of business. So we have to take his cost, salary cost, and put in your P&L, correct? So that is what they do based on the cost center allocation planning and structure. So both actual and planning data can be allocated. You can also do both actual and plan. So how do you do it? Cost allocation methods, okay? One is distribution, and the one assessment. Distribution and assessment. So distribution used for primary cost element, assessment is for secondary cost element, okay?
Yes.
So distribution process is mainly used for allocating the amount and quantities of one or both. Okay, one second. Just okay. Okay, so what I'm doing is, this is my blog, okay? This is mine, SAP Toad, Vijay in LA. Yeah, 2007, more than 12 years back, I wrote this. So allocation methods in SAP. I don't think you could see this. Yeah, now you could see this, right? It's still the same. After 12 years, it's still the same. Allocation of periodic. So there are differences. These are allocation methods. Okay, template allocation, periodic reposting, distribution, assessment, indirect activity allocation, target, and actual activity allocation. So we only look at this distribution assessment today. Probably we do it only today. This one, distribution.
Okay.
What did distribution do? Allocation of primary cost. Okay.
Okay.
Allocation with original cost element. So you're incurring a purchase services, that is the original cost element.
Yes.
Okay, and information report. This is actually very good. When you go and look at the reports, you will see sender, cost center, and receiver objects. So when let's say you receive the money, okay, then you run the reports, you can actually see where the money came from, where the cost came from, sender, cost center, and receiver objects. You can see both.
Okay.
Okay, and who is the sender object? Cost center. Where the money come, who can send the money? Cost center.
Right.
And what is the use? Settlement of primary cost.
Right.
You don't believe? I will go to this when I have confusion. So it's still, it's like this is I used to maintain this very earlier days. I was very interested in this. You can go here. I wrote some beautiful blogs here. Interview questions, a simple FICO process flows, foreign currency valuation support, profit center determination, and I think there's reply to a client. Yeah, so cost object controlling from an accounting point of view. Okay, with all these examples. Then the Blogspot died. Right? The Blogspot, with Facebook took over. So yeah. Interview questions. Interview question. All this IDOCs and IDOC 1. How do you fix IDOCs? Electronic transfer like ACH. How do you set the fund transfer due to later today? Pretty old. Let's see, 2007. Yeah, you can still look at fico.com.blogspot.com. Okay, so this is, the reason I went there is the allocation methods, because it's all over the internet, but I have in one place. Right, so distribution. So what distribution does? Let's do distribution today, and then assessment, you can actually figure it out. Okay?
Okay.
So before we do distribution, what we're going to do is, there is some configuration, calculation base, cost center activity type, percentage overhead, and things like that. Okay, so under the CSM controlling area, update the following admin overheads. Actually, you don't have to do this, in my opinion. This is calculation base. Okay, you don't have to do this distribution. So we just have to do distribution cycle. Okay, let's do this. So I should go to accounting, controlling, cost accounting. Okay, then this is not actual posting. This is a period closing. Okay, this happens during the book closing, right? Okay. This is periodic reposting, allocations. You have to go here under allocation, because we are allocating the cost center, okay, from one to another one. So distribution. Okay, yes. So KSV5. Right. So KSV5. It's easy to remember, right?
Yes.
Okay. Now here, this is important. You have to create a cycle. What does cycle means? Cycle is actually, what is a cycle? Meaning of cycle, right?
Yes, like after how many days or it should happen again, right?
So a cycle is something that happens recurring.
Yes.
Okay, it has a start, it has an end.
Yes.
That's called cycle. Something that recurs. What's your cash cycle? What's your revenue cycle? What is your life cycle? Right?
Yes.
Project cycle, right? So it has a start and end that happens, and things that happens in between. So we have to create a cycle here. Okay, so we don't have a cycle. First thing is we have to create a cycle. This is one execute.
Yes.
Before we execute the distribution, before we execute the allocation, we have to create the cycle, right? Yes. So which will be, I think, eliminate master data. I think maybe in the actual postings. But I think the transaction code is KSV1, I think. What's that? This is activity allocation. I'll tell you what is activity allocation. Okay. But I know the transaction code is KSV1. Okay, we can just directly go there. KSV1. See, create actual distribution. Okay. If you want to find where exactly this guy is, there's a transaction code as well. SAP underscore search. It's called mail, I think. Okay. SAP underscore. Now we search. underscore menu, I think. Right, SAP underscore search menu. I don't know what it is. I think I can find it now. TSTC. What is TSTC table?
All transaction codes.
Good man. I know that I wrote on the table. Whiteboard is still there.
Okay.
Search, SAP search. So yeah, there you go. Search SAP menu. How could I go wrong? Search underscore SAP underscore menu. See. Come on, damn it. So Control Y, Control C.
Yes.
I'm gonna add this to my favorites all the time. So it's easy. Come on, don't go to the bottom. Oh. So I'm going to use insert transaction. Okay, I can search any transaction. KSV1, right? We're looking for.
Yes.
It will take me directly there. It's saying go to accounting, flexible real estate management, or controlling, period and closing. Sorry, period and closing, current settings. We got to go to period and closing and current settings, which we did not do this. I'm going to controlling. Oh, controlling. But I don't have to do this because now I already know, right?
Right.
Period and closing, current setting. There you go. Yeah, there you go. So different distribution. See?
Right.
So I'm going to create a cycle. So for example, VRIT J. Okay, you guys create each cycle. Okay, VRIT J. I'm going to start allocating costs from today. Start date 01. I can put in the future past date as well. Okay. I can do past date and I can copy from, if I have another cycle, usually I can just copy. Like copying a GL accounts, copying a master data, I can copy. So usually people do. I'm not doing anything, just hit enter. I'm creating an actual distribution cycle. So if you know distribution cycle, if you run the distribution cycle, and then if you know assessment cycle a little bit, that's fine with you, right? You can go and learn.
Right.
This is more of a conceptual understanding. What happens in a company? Okay. Tomorrow, when somebody say about allocation, you should not blink like a squid. So you should at least understand. Oh, this allocation I know, right?
Yes.
It's basically transferring cost from one cost object to another cost object. Okay. Now there'll be a sender, there'll be a receiver, correct?
Yes.
Somebody sending, somebody receiving. And I'm going to name this as, first of all, I'm going to name this. So HRCC to corporate services, right?
Yes.
Okay. Is it iterative or cumulative? Iterative means it just keeps running until the cost, the final cost is completely distributed. Okay.
Okay.
Let's say you want to run some percentage, take only 10% and throw it. Okay. Yeah. So let's do this iterative and go to just press F function. You tell me tomorrow what it is. Iterative controls whether iterative sender is receiver relationship is considered when the cycle is processed. This iteration is repeated until each sender is fully credited. A small remainder may be left over in some cases. Okay, so the iteration is repeated until each sender is fully credited. So this keeps on running until the final guy, the sender, is completely drained out.
Okay.
Okay, there is a business scenario for this, and derive functional area. So do you also want to copy the functional area from the cost center? Correct. because
Right.
cost center is a functional area. So you want to do this. Let's not do this. Now this again, this is the header. Now this is header. Now we're going to attach a segment. Segment is where you will say, okay, what cost center, what exactly I'm doing. So you can attach multiple segments.
Okay.
Okay, so let's do this. I'm going to cancel this. And let me try to give some real-time example. Do you want to be saved? No. So what is the transaction code? Define distribution. Actually, it says, okay, IT, I'm going to create this guy. I'm going to say that corporate overheads allocation. Okay. Let me just give some example. SOCM. What's SOCM? Strategic overheads cost management. Cost management.
Yeah.
They call it SOCM. Strategic overheads cost management. Okay.
SOCM. Yeah.
SOCM. So I'm going to first segment is HRCC to corporate services. Okay. So HR to corporate services. Okay. HR is paying the managers, directors, and all these managers X amount of money. Okay. I want to transfer the cost to them. Okay.
Right.
Actually, that's a bad example because when the HR pays, the HR personnel records will have a cost center master, right? In the master data, they have a cost center. Let's say I work for a company, I have a cost center itself because I'm a cost center, right?
Right.
Because I'm an expense.
Yes.
Your time, right? 25 minutes. Okay. Okay. Give 5 minutes more. Yeah, I want to go and drop this off. So I'm a cost, right? So I belong to a cost center. And my cost and my cost center, I'm a cost. I belong to a cost center, and the cost center owner is usually my boss.
Mm-hmm.
Okay, he's responsible. Now this case, let's not call this guy overheads cost element. Let's just call this guy. So what I'm saying is usually HR will have my cost center. My expense will already go to my cost center. So there's no allocation process, right?
Mm-hmm.
The allocation usually happens, for example, from product to product. Promotions, let's say. Promo. Okay, expense.
Mm-hmm.
So one business, design business. Okay.
Mm-hmm.
Design business like LOB to retail business. Okay. If the design business, line of business, incur some cost.
Mm-hmm.
They probably entered into a promotional agreement and they paid money.
Mm-hmm.
They're saying that, hey, you also have to take this money, some amount. Okay.
Yes.
Right. So I'm transferring the cost. So sender rule is posted amount. Or you want to take the posted amount or you want to just transfer a fixed amount,
Right.
the base.
Right.
This is just a sender values. Okay. Just leave it there. Receiver rule, the variable proportions, fixed amount. You want to transfer fixed amount or you want a variable proportion, all this stuff. I don't even bother now. Go to sender receiver. This is important. Which cost center to which cost center. Okay.
Mm-hmm.
Sender receiver. Okay. So that is why I downloaded this into Excel spreadsheet. Okay, I'm going to send from 1000 to 200, correct?
Right.
So my cost center send is 1000. I'm going to send this to sender receiver is cost center 200. Okay.
Mm-hmm.
Enter values for the cost element. Now the guy is saying that, okay, there's so many cost centers, cost elements, right? Which one you want to take into consideration?
Right.
So I'm going to use this guy, 417001. 417001.
Uh-huh.
Okay, great. That's pretty much it is. Now going to center values. Do you want to take 100% of this amount? Everything,
Right.
which is 4084. I said, no, don't take 100%, take only 20%.
Hmm.
Okay, share in 20%.
Okay.
Got it? Then receiver tracing factor. Actual cost, I don't bother about this. So basically we are sending center values. 2 minutes. 2 minutes. Okay. Actual cost, receiving tracing factor. No scaling, I don't know what they are. Selection criteria, from what version, okay. Stage guide, maintain fields, cost element. Let's put this cost element here. 417001. Okay, so this is usually not a transportable object. Okay, in production, it depends on how you set the system. Okay, it's usually not transportable when you create a cost actual distributed cycle. Okay, now I created cycle VRIT. So next thing is I'm going to run this VRITJ. See what happens. ASBY. Okay. So I'm going to run for period 1 to 1 because this is always run monthly. VRITJ. No. VRITJ. Okay. See? Got it?
Yes.
So I can do a test run first. Let's see what happens. See? Cool. It worked. It says as a warning. But there's one sender, number of receivers 0. Why? We send from one cost center to another cost center, process completed with warning. Then I can look at what is the message. It says general message. Segment contains no errors. However, there's number of receivers 0. Okay. I can look at the segments here and say share in 20%. The segment is promo X. Okay, I'm sharing only 20%. The receivers are 0. I don't know why. The number of messages 2, which is this guy here. They're just warning messages. Yeah, the segment contains no receivers. Why? Then we have to look at it. Okay. So it says no receivers. So why it says no receivers? I'm going back to KSV3, actually 2. KSV2. Change. So I'm going to first segment. What's wrong with this? There's no receivers. It says I said cost center 2 to 100 is receiver. Oh, I put 2 to 0. Whoa, 0. Yeah. You know what I did? I made a 0. I made instead of 0, I put a O.
Right. Yeah.
So this is really good now. Now I'm going back to this guy. Leave this list. Now do the same thing. Again, warning message. Segment contains no receivers. Okay. All right. Okay. So again, why there are no receivers, right? So we have to go and take a look again. Execute actual distribution. I did save this, right? I think I did save this. I did save this. Okay, now go look at the first segment. Receiving is variable proportions. Let's fix portion. No, not fixed amounts. actual cost, no scaling. Let's put standard scaling, posted amounts, 20%. This is sender cost element. This is a receiver cost center. Yes. Receiving tracing factor, actual cost, standard scaling, version should be 0. Okay. Save by. Okay. Come out of this guy. Oh, I didn't save this. See? Yeah. Maybe not. So let's try now. It should work. Da-na-na-na-na. Okay. Again, there's a message. The segment contains no receivers. Let's see why. Promotes. What is the process not possible? Check the segment definition. You have set the selection criteria for the receiver, so no values will be found. The selection criteria for the tracing factor, variable numbers are not suitable for the field group selected. Example, system cannot find and receiver to the install logic. Okay. So let's troubleshoot this guy here. Do this best. Cycle. Version, iterative, object field groups, object currency, transaction currency. Let's do this guy here. For the first segments, I can also check here. Okay, you can check whether everything is okay. Sender 1000 will not be credited 100%. We know that. We only want 20%. So I checked this. Everything seems to be okay, right? Formal check. I did a formal check. So receiver has no receivers. Why there's no receiver here? Sender value. There is a 100% here receiving 8 factors. 2 to 100 receive 100%. No scaling. Okay, save this guy. Yeah, we have to troubleshoot this. Okay. So let's continue working on this, and then no receivers. The segments contains no receivers.
Yeah, I will be leaving now. So.
Oh, okay, man. I'll send the video. Okay.
On the video. Yeah.
So there is no segment contains no receivers. Why? This is actually pretty simple. Okay, but I never, I don't do this every day. So. So when it's a lock indicator, you just lock it so that nobody will make changes, right?
Okay.
So I did posted amounts. This is actual value, share in percentage. The posted amount in January is about this guy. Where's my spreadsheet here? Posted amount is 4084. Okay. And out of this 4084, I'm sharing 20% actual values. Receivable is, if I do fixed amount, it takes fixed amount. Fixed percentage, which is already here, fixed percentage. Let's say fixed amount. Receiver, fixed amount. See, if I do this, so your tracing factor is, what's calling now? Okay, so if you put a fixed amount, we can put, let's say the receiving guy is fixed amount, we can put receiving, but I don't want to put the fixed amount. It's always good for percentage, right? So I don't want to put percentage, variable proportion. Maybe I can do fixed percentage. Yeah, this might work. This is a sender. This is everything is good. This is the receiver. Sender value is 20%. Selection criteria version is always 0. Okay, plan and actual is 0. Sender value. Receiving tracing factors percentage. Let's put here 20%. See what happens now. Yes. See, now we have this, right? So what happened? What's the difference we made is, what did we do here?
Fixed.
Correct. I changed to fixed percentage because if I put variable portions, it's probably asking for some. We put variable portion. Maybe I don't know what's the group. It's a cost element group. Version. Receiver tracing factor. Maybe negative smallest variable proportion type is actual cost. Okay, here segment header. Receiver is variable portions. When I say variable portions, receives variable. Okay, it's actual cost, but it's a variable, not fixed. Scale negative tracing factors. I don't know what this. When you do this variable portions for receiver, I go back here. Variable portion is actual cost. Correct. Okay, I don't know. Let's forget it. Okay, let's go and do this guy. Segment header. Do fixed amounts, percentage. Okay. Then I go to this tracing factor. Out of, so basically I'm taking 20 from here. Okay.
20%, yes.
Then I am putting only 20 here. This is wrong, right? I put 100% because out of this 20, it's taking the 20%. Okay. Share the 20%. And if I get more than one cost center, I can put it here. For example, I also want to send this to 9030. Okay.
Okay.
If I get more than one cost center, I can go to sender receivers. Okay. I can put 9030. Okay.
Okay.
But usually when you have a cost center group, you should put the cost center group here, which makes a lot of sense, right?
Yes.
So basically it says takes one cost center group and send it to another cost center group, everything in the cost center, correct?
Yes.
Every cost center in the group. So if I do this, now if I go to receiving tracing factor, it will tell me, list all the cost centers here, see?
Yeah.
So I don't want to put this. Let me just take with 3 examples until here. Let's take some examples here. Sorry, put this guy here. Okay, let's say we just put 4 or 5 cost centers. Now here it's a fixed percentage, 20%. Okay.
Yes.
Then tracing factor is how do you want to allocate this 20% into different cost centers? So basically I can take the 20. Okay. Put 10 here. Put 5 here. Put 25 here. Put 15 here. The balance goes here, right?
Yes.
Which is 40, 50, 55, 45. There. So this is exactly how typically companies do.
Okay.
Okay. Now you want to put in a group, you can put in a group as well. Take all this from and put in this group.
Yes.
Okay, you can do that too. Let's see. What's cost center group? KCH2, right? I think so. No, this is profit center. Cost center is KSH3. Yeah, KSH3. Yeah, H1. But we don't know what company code they belong to, right? But
yes.
Here they get this company code. So
1000.
I can take from H0010, this corporate guy. Okay. So I can put this in the group. Instead of cost center, I can put in the cost center group. Got it?
Yeah.
Now I'm going to take this cost center group and send it to, from corporate, I want to send it to marketing and sales, for example. That's a value here, H1300, okay? Let's put H1300. So it's saying don't enter this because you are entering a group, right?
Yes.
Save now. Choose the receiving tracing factor thread after changing them. Yeah, because now you put more cost centers, right?
Mm-hmm.
You put more cost centers, saying that we put a percentage here. Now we have more cost centers.
Yes.
Probably one. We say go and change it. It's see, there's so many here. Receivers are so many here.
Yes.
So we just have to put, there's 19 of them. Okay, that's a problem here.
Mm-hmm.
Now what I do, no, the switch 1300, there's only one here. Mm-hmm.
Okay, before we put the 4.
No, see, H1300, under H1300 here, there's only one cost center, correct?
Yes. So under that we have different cost centers too.
Why it's showing everything here, right? You know what I'm saying?
Yeah, yeah.
In this group, there's only one. Let's see, where's 3010 here? Should be here under this company, under 3000. See, we can expand the whole thing. Okay.
So in that only we have other sales marketing also we have, right? 1310, 1320.
Mm-hmm. Here.
Yeah, yeah, at the bottom.
Oh, yes,
yeah,
yes.
Those. Yes.
You are right. That's a good thinking. Yes. I see. That is actually
inside those. Yeah. Inside
okay.
That's the parent, right? That's right.
Got it. So then in that case, let's just take this guy, this group. Okay, H1320.
Yeah.
Or we can trade this. We can do this group. Okay.
H1330. Yes.
Good man. Good troubleshoot. H1330. Now if we go to tracing pattern, I'll see 3. See 4 actually.
Yeah.
Now I can put 10, 6, 4, 4, 20, I put
80.
Save this guy. Saved it. Now let's see the magic here. See, receivers are
received. Yes.
Right?
Yeah.
Senders. Now you can look at the segments here and say receivers, number of receivers, and all this stuff. You can also there is a button. Yeah, you can look at the line items as well. It will tell you all the line items it will potentially post.
Okay.
So basically, it is going to credit this guy. See, credit and debit this, credit and debit this, credit and debit this, credit and debit this. Got it?
Yeah.
What does it mean? When it's credit, it takes the money out. Debit, always expenses, right? Debit the expenses.
Yes.
When it's a debit, it's an always expense.
Expenses.
Yeah. So it is crediting 1,000 because everything goes to 1,000. 80% from this, right?
Yeah.
So that's 4084, right? Out of 4084, 4084.04, we are taking 20%, right? 0.20. 816.808. After this, 0.80 goes to this guy here. Okay? That's actually wrong. Company CO area currency. This is transaction currency. Let's bring the transaction currency. Euro. Value in transaction currency. Yeah, this should be euro as well. Okay. Let's go back to display actual cost distribution. Actual cost document, line items. Okay. ASP to first segment. So I'm taking 20% posted amount. Okay. From that guy and sending to this guy. Now, that being the case, this is for period 1 to 1. In my report, only for this GL account. So we should not consider this. We are not considering this, right?
Okay. That's
Only,
a different GL.
Correct. So basically we have 2084. Right? 2084.
Yes.
We see it here. 2084.
Yes.
0.04 into 80%, sorry, 20%, which is 416.808. Okay, out of this, I'm sending 80 to this guy into 0.8. 333.44. 333.44. Okay. It is taking the money from here and putting the money from here using the original cost element.
Yes.
Okay, so that is what, if you go back to we are doing distribution. Sender object is cost center. Information report, it shows sender cost center and receiver objects. It shows both. Okay, it's showing both, right? Sender and receiver. And original cost element, it is using original cost element. Okay, original cost element.
Original cost.
In this report, it shows both sender and receiver. That's the difference.
Yes.
In the assessment, also it's the same, sender and cost center, receiver object.
Okay.
When you do periodic reposting, which we will see later, you don't have to, it only shows the receiver objects.
Okay.
Which means you don't know where the money come from, correct?
Yes.
So that is why people use this tool. These are powerful. Okay.
Okay.
So I'm going to do this is exit the list. I am going to run this in production mode. Okay, this is test run. Remove this test run. I can do a background processing, or I can just, people usually do background processing. Execute. It runs in the background. Okay, this is a background screen. So you don't have to do anything. Okay, give a job name. It's asking for a job name. So let's say January. Okay, close, right?
Yeah.
Assessment. CEC distribution. Okay.
Yes.
Start immediately. Check, confirm. You can also schedule this, right? Schedule this for tomorrow, anytime.
Yes.
Now, how do you look at the job? It says job gen. No, it says is ready. What does it mean? So the jobs are in SM37.
Okay, bad job.
Yes, exactly. Yes. Okay, I'm going to go back. Or you can go from here, my own jobs. Okay.
Okay.
So SM37. It's active. This job is still running.
Yes.
So it's still running good, right? 47 seconds, still running. So in the meantime, I'll check my WhatsApp.
Yes.
So finished, right? Great.
Yes.
So there's a spool here. You have to look at the spool. Okay. So look at open this guy here, 2 pages. So first will be header, second will be this one page, this is second page.
Yes.
Okay, share in 20%, blah, 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 all this stuff. Now, if I go and run this report, that is why I downloaded this report in Excel so that I can compare, right?
Yes.
That's always important. Check your work. Just don't go to the client and say I've done. Okay, always check your work.
Okay.
Even it takes time, that's fine. Check your work always. So again, you can do the cost center group H1, but we sent it from 2 to 100, correct?
Yes.
Actually 2 to 100, we actually sent from one group to another group, right? So how do we run this report? The best way is let's do this first, okay? 2 to 100. What happens to 2 to 100? Same thing happened yesterday. I don't know how do you feel. Same thing happened yesterday. What did we do yesterday? Same thing happened, right?
Yes.
That's because we put the company code here as a
US 16. Nope.
No, it's not there. Doesn't matter. 1000. If the parameters are wrong, it will say they're wrong. Okay, it will say in the bottom.
Okay.
See, there's a small mark here, cost element. I don't know what's going on here. Filter. Is there a filter? There's no filter. So you can also look at directly in Microsoft Excel. It shows an Excel format.
Yeah.
And then see what template you want to use. People have used a template here. You can use a template. Filter. Display, you can actually say display total lines without horizontal guidelines, without vertical lines, all this stuff. Okay. So saying which template? Select one entry. No, I'm not going to do this. No Excel. So oh, why? There's no value, or why that? Maybe it's wrong. Oh, I think it's a wrong. Let's see here. Yeah, 417001. That's what I put. 417001. Yeah, that's what I did.
Yeah.
Maybe there's no value. How come? We only took 20%, right? 41701. Out of this, we only take 20%. There should be balance here. Share in 20%. Okay. Let's go to the take a look at. So this is the distribution. We can double click and go there. First segment. It's only 20%. Share sender or posted amounts. Share in percentage 20. It's only 20. We'd only take 20%. Okay. It take only 20 from here. Take 20%, which is about close to 500 plus, 400 plus. 2084 into 20, 4168. Yeah. I don't know. Anyways. How come it's completely wiped out, huh?
Yeah.
126 here. 141. How come this is showing up? 4100. It's not in my report. Right? 2000. Oh. No. We sent from 2 to 100, right? Yeah, we sent from 2 to 100.
We sent to, it's a receiver 2221, 2200.
Yeah, no, H1010, H1330. Yeah, we put the, okay, I see. The H1010, which is all this. Okay.
Okay.
Which is H1, no, 1010. H1010. Okay, so I think we are wrong then. So let's do to this report. Where's my KSP1 report? H110. And let's do this guy H1330. H1010. 1010. Okay.
Sir, I think you need to drop your son. It's 8:30.
Yeah, my wife did. Yeah.
Oh,
Actually, no, seconds and I have to drop it. Yes. Thanks for reminding. He's waiting. Okay, so why don't you do this? Take this and, this is what happened. Okay, so basically you got the concept, right?
yes.
Okay, so go ahead and post some transaction.
Mhm.
Take note of the cost centers. Use the cost center groups.
Okay,
Run the create a cycle and execute the cycle.
sure.
Okay, so stop that.
Can you send me the recording so that I can look over once and I can?
Yes. Okay.
Yeah,
All right. Talk to you. Thank you. Bye.
yeah. Thank you.